operational budgeting. We will do the same thing. We'll start with the simple things, a bit of theory, climb up the ladder, and then we get to the exam level question. But we start the same way. How are you feeling today? Today on a Saturday, a relaxed day. And it's not after work. Whew. So I hope it will be a little bit easier today. Okay, let's see. Let me close the things which I don't need. Okay, I was about to close Teams and that was going to be a disaster. Okay, let's see. What up? Med is feeling okay. Nelly, good. Reshma, good. Where am I rushing to? Then Mandy, Tony, good. Great spot of. Okay, ladies and gentlemen, we are going to get going. Leasing and buying. Okay. I thought we should, one of the fundamental things which you, under this module, financial management, one of the fundamental things which should always sit in your head is the income statement. So I thought, well, let's just brush up on what it looks like so that when we say before tax, after tax, blah, 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 then at least it makes sense. Okay. So income statement, remember at the top, okay, when we find our laser, at the top, it will have your sales, cost of sales, gross profit. At the bottom, it will have expenses, salaries, depreciation, other expenses. We all know that depreciation is an expense, but is not a cash flow item. Expense, but not a cash flow item. So for any investment related question, usually we need to always be mindful about depreciation because the depreciation messes things up a little bit. Okay, then after that, we will get our net profit before tax. We can do the tax, and then after tax, net profit after tax. This income statement, this structure should generally be in your head. Because whatever questions we have, normally we are assuming this, the statement, the income statement is sitting in your head. Okay. Now we just say, what is the after tax? We have done this before. So when we look at a company and we say, what is the after tax cost of lease payments? We're going to say lease payments, let's say if it's 380 after tax, the after tax cost of lease payments would be, if the tax is 30%, 380, 1 minus T. We did this before, but just to refresh, 266. If insurance is 10,000, the after tax cost of insurance is 10. My numbers are wonky. I don't know where I was. I was so happy before this lecture that my numbers are looking good because I looked at them and they were looking good. 100,000. 1 minus tax gives you. So we can actually just say 100,000 times 70% is the after tax because we're just a 1 minus tax. Now, yours is this one. What is the after tax cost? What is the after tax? What are the after tax costs? If insurance is 53,000 and the running costs 42,000, the tax is 40%. Do your thing and post in the chat while I'm starting my other teams here, my backup teams. Just to be safe. Please post in the chat once you get your answer. And also, it's just also a warm-up. Okay, let me say join call here. Add this device. This is our warm-up question so that we are warmed up when we get to the big question. Okay, Tony is opened. Let's post, ladies and gentlemen, let's do that. Let's do this. Let's with the easy things, let's do them quickly. The easy things, let's do them quickly. And then so that when we stop and spend time on the difficult things. Okay, looks like we are good there. Let's go to the next one. So we can actually just say 53 plus 42 times 1 minus the, which gives you that in the total. Okay, let's do the next one. Cost of repayment of the asset 120, lease payment 50,000, insurance in lease 15,000. Common tax is 30,000. What is your after tax for B? And if you have a question, ladies and gentlemen, this is the time to ask. Anytime is good time to ask. This class is small, so anytime is a good time to ask a question. Let me open my window, and now it's warming up. It was cold in the morning.
Morning, Doc.
Yes, Bobo.
Mute now. I'm driving. I'll be stopping in the next 10 minutes so that I can participate.
Oh,
I'll follow
okay.
this.
Thank you. Thanks for letting me know because I was going to start harassing you.
Thanks, Doc.
Repayment of asset 120, lease payment 50,000, insurance in lease 15,000. What is the after tax cost of lease option? Post in the chat. There's a little bit of a trick, small trick though, not a big one. I'm sure many of you have the answer, but you are keeping secrets. We shouldn't keep secrets, guys. I thought we were friends. We can't be keeping secrets. Unless if you say he's big mouth, so he will not show the answer. Reshma, where is your answer? You're keeping a secret. Okay. Cool. Okay. In the PO you came and say I want to participate. That's your that's why you came.
No, I'm just settling in.
Yeah, you are taking time to settle.
I'm just making coffee.
Oh, that's why you're distracted. Okay, so the trick here, let me see if my answer is correct there. So it's 55,000, no, 55,000, 55,000, my foot, 65,000 times 0.7, 45,500. There, the 500, I don't know who ate the 500 when I was doing my slide there. Somebody disturbed my 500. Any questions, ladies and gentlemen? Any questions so far? Because it's one of the elements you need to be able to compute. The thing which we didn't include is this one. Because remember, we are just looking at the lease option. And the repayment on the asset is not a tax deductible expense. Okay, let's go. Now we are saying, okay, what is the, now we are building up a little bit on the question. We're saying the lease information is annual lease payment is 100,000. The lease term is 3 years. Maintenance is 20,000 paid by the company. So which means when you take the lease, you are going to pay the maintenance costs. Company takes 30% discount, rate is 10%. What is the net present cost of this lease? So to find the net present cost of this lease, first thing, lease payment plus that, which is that plus that, gives you 120. Easy, ladies and gentlemen. What is the after tax? We're already doing that. 120, which is that, times the 1 minus the, which gives you 84,000. The next thing, now the new thing is, what is the net present cost? So we are saying every year for the 3 years is going to be paying 84, 84 there, 84 there. So this you already know, ladies and gentlemen, is the present value interest factor of an amount because we are calculating it per year. So if in case you forgot, we are using this 10% discount rate for 10%, 1 year, 2 years. So we go here into our table. Today I was ready there. 1991, 82, 64, 75, 13. These are the numbers you are seeing here. 1991, 82, 64, 75, 13. If we multiply, we find present value for year 1 is that, say year 2, year 3. The total is that. So the total cost of the lease is 208,891. Yours is this one. So what I want you to do is once you get to the total cost after tax cost, post it so that we can see if it makes sense. And then you do the present values and then you post so that we see the total cost for the lease. So you can see I've stripped away all the other English so that we just concentrate on the concept. If you have a question, you can ask it, but I'm going on mute.
Sorry, Doc. For the table values, did you use a correct table? You used table 1, is that correct?
Yes, I used the table 1.
Okay, should that not be for payment at maturity and...
Because that's a good question. Why I used table 1 is because we are looking at the amount per year. So I'm saying what is the present value of the amount 84,000 in year 1? That's why I used that. In year 2, that's the present amount. So I'm just doing an amount. But if I alternatively, I could have said, what is the present value of 84 over 3 years for 10%? Then I would have used table 2.
Okay.
The answer would be it will still come to this number. I don't know whether it makes sense.
Yes, it does. Thank you.
Okay. I was busy talking to myself. Tony, is your 382 the final cost?
Yeah, sorry, over the 4 years.
Oh, okay. I don't have the answer myself because I didn't work it out. Nearly you are 3,000 rand up from Ndapeoshali and Tony. But I'm not saying it's wrong or it's right. I haven't worked it out, so I don't even know the answer. I'm just saying. You are confident, Nelly, you are confident with your answer.
No, I'm not.
You're supposed to be confident.
Okay, I'm gonna double check the answer. Maybe I made a mistake somewhere.
Okay. Okay, I see Rahab's answer is also 382,712. And Reshma's answer is also 382,712. Okay, let's see who hasn't posted. Oh, Bobo is driving. If we say post, then he might post himself on the side of the road. Oh, looks like everyone is Anati. We are waiting for Anati. 382,712. Ah, okay. It might be by popular demand, by consensus, but let's just do it. Let's just do it together, just so that we are also sure that we are on the right track. So I copied the numbers and put them here, and I did the lazy thing, meaning I prepared myself there. So we are saying the lease payment, lease is 150. It's good when we have an answer, because then if I make a mistake, someone will see it. Lease, and then running costs, so annual costs. I'm just saying annual, we already know 25. Then I'm going to copy it. Then what else? Now, just that. Okay, total. Okay, let's see. Let's see Tony's table. Equals to that plus that, 175,000. Then we are going to say after tax ATC. That was a good to go. ATC is equals to that times, what's the tax rate? 28%. So 72.72. 126, I think that was correct. Then we are going to say PVs. PVs, because I've done the lazy thing, I already have my number at the top there. That ATC times that. And today is a Saturday, which is a good day to do these things because we are not. Then we have the NPC. Or you transpose the numbers there. Okay, let's see. NPC equals to sum. We are summing that. 382,712. Ladies and gentlemen, you are too good. You are too good. So no need for long explanation. Then let's go to this thing. The thing also, when we are looking at lease versus pay, there's a thing called tax shield, which we need to talk about briefly. I'm not going to bore you with a long explanation of tax shield. So we are saying, what is a tax shield? It's a reduction, because a reduction in company costs due to a tax deductible expense. So to find the tax shield, we are going to say it's an expense times tax rate. Why tax shield is important in this case? It relates mostly to depreciation. It's treated in a little bit of a funny way, but okay, let's look at how it's treated. Okay, so we are saying we are doing our thing for depreciation. So we are asset costs price 300, life 3 years, salvage, new, depreciation, straight line. We all know that. Annual cost insurance, 10,000, maintenance, 10 and 20, cover tax rate, 30%, discount rate, 10%. We all know these vectors, they are not new. So we are saying annual cost for the machine there, because we're just adding that and that. After tax cost of the machine, we are just doing 30,000 times that, which we already know how to do. Present value, we already know. We are just saying 21,000. We are doing our PVs times 21 times first PV, second PV, third PV. It gives us 52,000. Okay, we haven't even spoken about tax shield. Now the tax shield, depreciation. Remember, depreciation is not a cash flow item, but it gives us a tax advantage. So that tax advantage is the thing which we are going to call tax shield. So we are going to say, what is depreciation? Depreciation is over 3 years, so 300 divided by 300,000. So actually, annual tax shield or saving is equal to 100,000 times 30 there. So this amount should reduce our cost. That's what we're going to do. So PV of the tax shield we are going to do that gives us there. So if we look, we are going to say the present value of our tax shield versus our expenses is equal to the tax shield, which is 74,000 minus 52, which is the answer we had here. So the net present cost of the machine is 300,000. Where is the 300,000? Which is this one. Price we bought it for minus 22,000 is equals to that number. I'm open for questions.
Please repeat that. I'm not sure if I followed.
Yes, please.
So you see, here we are happy here. First line.
Yes.
Okay. What about there? After tax cost, you are happy there.
Yes.
What about there? You are happy there. Next line.
Yes.
Yes. Okay. So that's the part we were doing just a short while ago. Tax shield. Depreciation, you are happy with how we found the depreciation here.
Yes.
Okay, because we said just say 300,000 divided by the life, because there's no salvage here. So we are just going to say 300 divided by 300,000. Next line. What is the annual tax saving? So we are going to say the depreciation times 30%, 30,000. That's the tax shield. Then the next line, we are finding the present value of the tax shield. So we're just saying 30,000 times, you see this number, present value, which is the present value of 10%. That for the first year, that for the second year, that for the third year, which gives us a tax shield of that. Mandy, are you happy there?
Yes, thank you. I'm clear now.
You're supposed to say thank you when you see the answer. Okay, so now we are going, remember, tax shield is a tax advantage. So it's like income, it's income in quotation marks we're receiving. Ram, yes.
Yes, just a step back. What's the difference between the after-tax cost and the annual tax saving? The theory part behind it.
Oh, the theory, the theory is to say the tax saving is to say, remember, depreciation, you don't pay out any money. But the government is saying, because you bought a machine, we are going to allow you to take out, in this case, 100,000 every year. As if it's a cost. That is a tax saving.
Okay.
Which is the tax shield. So then then we find the present value of the, we are going to say 74, which is the saving minus the cost, which gives us 22. To find the total cost of this machine, the net present cost of this machine, 300,000 minus 22,000 gives us 277. I'm open for business. We are also open for business. This is your question. So you do, when you find your annual cost, post it. Then you can, once you post this number, then you can post the present value of the cost. Then you do the tax shield, present value of the tax shield. It just helps me to see if we are making some progress. And in the meantime, I'm going to shut up so that people can concentrate. What's happening? Let me check what's happening. 28,800. AFC. Rab, I don't even know. Your shortcuts are worse than mine. AFC. After tax costs. ACM. I don't know what that is. I don't know what that is. As long as it makes sense to you. Oh, annual cost of machine. Okay, cool. Okay, let's do this thing together. Let's see. Are we almost there? Let's see. Mandy, where are you? I don't know. She's gone outside. Maybe she's standing outside the gate as we speak.
Dog, please.
The beauty of Teams, you think if someone, someone is not even there.
I'm right here. I'm sweating. I'm trying to
Okay.
make sure I get it right.
Okay, let's do this thing together then. If you are there, that's good. Okay, here is our question. I put it nicely in Excel. Okay, I think that's good. So the first thing we are going to do is to find out, okay, 400,000. What are we going to do? What we can do here to help ourselves, to make our lives very easy, is we put a year 0 here, because we are going to need it. So we are going to say, what's the price? We are going to say minus 400,000. Minus 400,000 because it's money going out. That's why minus. If you see this minus initial investment, minus something. So we are going to say initial investment or cost of machine. Okay, now we are going to say, now what's the next thing? Running costs is equals to all inclusive 40,000. So running costs 40,000 per year. Copy. 40,000 per year, that's running costs. Discount rate, There's nothing else we need. So we are going to say after tax costs. No. Let's do the depreciation. Let's do the depreciation because we are going to need it. I think let's do the depreciation at the top. Let's do the depreciation somewhere here. Depreciation will help. Depreciation. What's our depreciation? Salvage 0 over 4 years, so equals to 400,000, 1, 2, 3, divided by 4. Okay, copy. We're going to drop it 100,000 per year. The government is allowing us 100,000 free. So we are going to say tax shield. Tax shield. I'm just doing it however here. Equals to that times 28%. Yeah, carbon tax is 28%. Copy. Okay. What's our next thing? What are we missing? I think we have everything. So we are going to say ATC is equals to, because that one is So our tax shield minus that 12,000. Okay, yeah, I did calculate this before, so I'm also seeing what I'm seeing same time as you. So PV, present value is equals to that times that
What's
something
that
is
PV factor? You say is that 12%? Where how did you get that 0.9?
yeah, right.
Yes, I think that's
Nah, you are right. You are right. Okay. Allow me to do a cheat so that we can make progress. I'll just do the calculation for a PV. 1 divided by, instead of looking for it, 1 divided by 1.12 to the power of that, so that I can build my own PVs. Okay. Does it look close to what you have?
Yeah.
Yes.
The PV, I looked at I was looking at the table. That's why I don't like looking in the table. So the true cost, net present value of cost, net present value of cost is equals to sum that plus that 436. Is that what you got? No, I don't see any.
No. It's not what I
No.
got.
Where are we missing each other?
Not
I
even
did calculate this before, so I could
You
have
were
made a mistake.
fast, Doc.
Where?
You were fast. We weren't there yet.
Oh, when did when days. Tony, where were you when did you get to the end? Mandy,
Yes, Doc.
what's yours 87 there?
I didn't even do it the way you did it. So
Yeah, I'm just thinking of.
I'm still trying to pick up where I went wrong.
No, maybe let's see what I did before. Let's look at the slide, because now I'm just getting to the answer. That's the problem. Okay, so I did the annual cost first. That's what I did first.
Yes.
Annual cost of machine. Okay, let's do that so that we are consistent. Now I'm just going for the answer. That's the problem. So annual cost for the machine, let's remove this so that we don't confuse anyone. Annual cost for the machine is equals to, what is it, 40,000? Yeah, running cost is 40,000. But I'm going to put the running cost somewhere here. 40,000. So the present value of annual cost, we're going to say equals to that factor times that. I hope this makes sense. Okay, so PV of cost equals to sum 121.
Doc,
Rab,
what is the after tax now?
yes, yeah, right, man. Yeah, yeah. Yeah, what happened to the tax? That's my popular mistake. After tax costs is equals to that times 72%. Okay, that's where they made a mistake there. That times that gives us that copy. Oh,
Thank you. Thank you.
I had completely missed the text. Okay. So that's our present value. So now we are going to do the tax shield. Tax shield. Our tax shield is equals to 400,000, 1, 2, 3, divided by 4. That's the depreciation. Depreciation, 400,000 divided by 4. So every year is going to be the same. Then we are going to say PV of tax shield equals to that times that which brings us to equals to sum everyone here. Okay.
Don't you work the tax on top of that? So
Huh?
don't you work the tax? So it's
No.
100,000 times 28, 72,000.
No,
Or
no. That one, the shield is just the 100,000 times the 28%. Huh? Ah, yeah, right.
No, that doesn't make sense.
Yeah. It's Saturday. I don't know why I'm making mistakes. Yes, times 28%. Yeah, right. Copy. Like that. Oh. Okay, that's more like it. Anything else? So we can say present value of cost. Yeah?
One sec, Doc. Can you please go back to the 28,000?
So
Yes.
that depreciation times
You divide-
28% is your tax shield.
You divide it by 4 and then, okay. All right.
So it was a depreciation, which was 100,000 times 28%, which Tony saw that I didn't even take I just took the depreciation, the whole amount. That's why it wasn't making sense.
Okay.
So we can say present value of costs, including the tax shield, is equals to this benefit which we got from the government minus our actual costs, gives us minus 2,000. So the total PV of costs equals to minus that.
Okay, so now I'm lost because now this answer is different than the one we just had now.
What do you mean is which one?
No, the previous one you did.
Oh, the previous one.
Yeah,
Because
the one we just did earlier had a 436,000. Now this
was
one
it close
is
to what you had?
no, the one that you did before we went back to Excel. Now you redid this most now.
Let's look at it carefully because maybe okay. So we are saying annual cost there 40,000. We are happy with that.
Yeah.
Then we are plugging in the cost 72% here. Then we are doing the PV. You happy with that?
Sorry, Doc, shouldn't it be the cost 400,000 plus the 40 and then you minus the tax? So the total cost should be 316,800.
No, but remember the costs are getting an advantage of the tax shield. So what you're saying is it's 400, this 400 plus this one.
The 40.
I don't know the PV of 40.
This 40 is the running cost plus the
Yeah.
price that you're going to pay, which is 440.
So
right?
you're saying, I'm assuming you're saying equals to
440, yeah, minus 1 minus 0.28.
Okay, let's see, 440. No, we can't do 440. Remember, 440 is an annual cost.
Okay.
440 is a because it's annual cost per year. So each year it's 40. Otherwise, we have to say 400 plus that. So what I thought you meant was, I shouldn't we say equals to this 400? 400, 1, 2, 3, plus that minus that. Yeah, it's the same number. It's the same number. Okay. Tony, what were you saying?
No, I'm validating.
Doc, can you go just back to the PV of the tax shield there?
This one
Yeah. That one is
is it 28,000 times the present value factor. This one
okay.
in the,
Okay. Yeah. Yeah.
so we're just finding the present values there, which gives us 85. Now we're saying the benefit here, the benefit minus that, which gives us a net of 2,000, which is the net cost for the entire period. Then we are adding the, because it's a negative, that's why we ended up with a 402. Okay, ladies and gentlemen, let's go to the next one. This is not the end of the, any other question before we go to the, we are just probably, we are going to do a similar one just now, okay?
Okay, if you're going to do the similar one, okay, because I'm still not confident.
No, don't worry. We are going to do many similar ones now.
Okay.
Okay, because nobody sent me another question to say they wanted to do another question. So we are still there. Okay. Now this is more, it's the same concept, but we are just building more complexity on the same thing. Okay. So as usual, I'll be doing the left side. Yours will be the right side. But now, this one, the easy one. Easy one. United Traders, a sweet manufacturing company, needs to acquire a new machine to expand its output. Let me zoom out so that we don't have too many problems. The machine is 2.2 million there. The analysis will cover 3 years, which is the machine's economics useful time. Okay. So it's going to be depreciated over 3 years. The company uses the straight line method and the machine will be zero salvage. We already know that. Maintenance cost 20, insurance 30, we already know that. Company takes 30, after tax cost is 15%. The company can lease the machine for 3 years. So we say lease. For 3 years, 850,000 per year. So this one, we are going to say 1, 2, 3. Lease payments, 850,000. 850,000 per year. Copy, drop there. Now, don't let me forget tax, which is my favorite thing to do. Tax, after tax, okay. After tax, lease costs, okay. We are just making abbreviation as we go. Equals to that times 1 minus T. 1 minus, what's the tax? 30%. That's our lease. Since we have done a simpler one, what we can do now, we are going to just do the PV. At a discount rate of 15%. Okay, let me do the right way. Do it the right way, not the shortcut way. And the right way is what? 15%. So what I'll do to make my life easy, I'm going to just snip that so that we can see the 15% and your 12%. So I'm going to snip that area. 15% and 12%. So we should snip from here. Snip up to there, up to 15%. Then we can put our snip somewhere here. Okay, so it's 15%. So PV for 15%, we can look nice. Now it's there. Is 0.8696. That's the part which I don't like. Is 0.7561. Is 0.65756575. That's the part I don't like. The copying, the typing. Okay, so we are going to say present value of lease is equals to that times that copy sum. So PV of lease is equals to adding everything, sum. Okay. There. Did I make any mistake? In my mind, I didn't make any mistake. Not even one. Not even nearly made a mistake. No. So confident. Okay, yours is this one. Do your list. Ah, we forgot something.
After not making any mistake.
We forgot. Why didn't you remind me of this line? The company is responsible only for maintenance costs. Okay, so I'm supposed to add maintenance costs here. So I'm going to add the maintenance cost to the lease plus maintenance costs. How much were the maintenance costs? 20,000. Okay, because there's no equal sign. 20,000 there. Copy. Now I'm even more confident. Yours is this one. Do your list. Let's do it quickly. Ladies and gentlemen, this is the third time or the fourth time we're doing the list. Patrick, you are very quiet today.
I'm very quiet, doctor. I joined in a little bit late, so I'm still trying to catch up, but I will catch up, no worries.
Okay.
Thanks, sir.
Bob, are you still driving or you stopped finally?
No, I just made it home now, so I'm good.
Okay. Oh, just okay. You just
No, I'm here, Doc. I'm here, Doc.
you're there. Okay. That's good. Tony and Rab posted their final answers. Okay, now I will have to wait for people to post. If you have your answer, please post so that we know where we are.
My answer does not look like Tony's or perhaps. I don't know what I'm missing.
Did you say something, Yanati?
I'm saying my answer is very different, Doc. So
You can
I'm missing
post it.
something.
What if it's correct? It's the only correct one.
I think I'm missing something. I need to go back.
Doc,
Yes, I'm
please
here.
put the cursor on the ATLC.
Thanks.
Okay. Okay.
Dapeo Shali, what's happening?
I was kicked out, Doc. I'm
I
just trying
don't
to
know
catch
why.
up.
Who kicked you out? I think it's who could have. Let's see. I think it's Patrick. You have to have your suspects. Okay. Gents, ladies and gents. Okay, let's do this thing together. Okay. I haven't done it, so we are going to be doing it together at the same time. Okay, let's reduce this size. Okay, but we are going to do abbreviations. Analysis will cover 4-year period. Okay, wait. We are just, we can start in the center of the question. Okay, let's do this. Swift Logistics is a courier company. Needs a acquire delivery truck to expand its fleet. The truck costs 500,000. The company must decide whether to lease or to buy. Okay, so we are just doing the lease. The analysis will cover 4-year period, which is the truck's useful economic life. So no salvage. The company uses the straight line depreciation in the truck will have a zero. We don't care, we are doing the lease. Company takes 28%. After tax cost of debt is 12%. Okay, that's fine. Lease over the 4-year period. Okay, now we are not going to make that mistake. Lease. Okay, my mistake, not your mistake, my one. Okay, how much is the lease payments? 180,000. We're going to say 180,000. 180,000. We are going to do 1, 2, 3, 4. 1, 2, 3, 4. Then we are going to copy it and spread it over the time. 4 years. Nice. Okay, but you know what will be nicer if we put that comma thing so that we actually know if the number is correct. Okay. The lease agreement includes maintenance cost, the thing which I made a maintenance cost, which I made a mistake the last time. Maintenance cost is how much? Where is the maintenance cost?
I think
Ladies
that's
and gentlemen,
included in that already.
30.
It's
Huh?
inclusive
It's
in
included,
the
isn't it?
disagreement.
It's included in that 180.
In the
What a poor question. Who do we blame? The person who said the question. Because 1 minus tax is 28%, I think. 28%. Is it looking right? Let's see. M20. Yeah, she's looking right. Then we are going to do the PVs. I didn't type the PVs. What was I
Company is
doing? I was just.
responsible only for its own annual
Huh?
insurance cost.
It's 0.8929.
0.8929. Next.
Doc, we didn't
0.79.
We
we
include
didn't
what?
include the insurance costs.
Because they are not part, it's only maintenance costs.
They say the company is responsible only for its own annual insurance cost of 25,000.
It's only responsible, it's only annual insurance. The lease agreement includes all required maintenance. The company is responsible only for its annual insurance cost of 25,000. Okay. You're right. You are right. Ah, you are right. That I was looking for the. Okay. Then you are going to say insurance. I was going to repeat the same mistake. Insurance is equals to 25,000. Whoever was telling me the present values should be ready for the present values. So we're going to say after what we are going to do here, I'm just going to add insurance onto here. Maybe someone might be confused while I'm playing around here in Excel. And that won't be good. Total, we are adding equals to that plus that 205. Let's put our comma thing. Then we are going to say annual total. Then we are going to put the tax equals to that times 1 minus 28%. $147. We are happy so far. Okay. I won't be like 101. Okay, what's the present value for the next year?
0.7929.
929. Next one.
0.7118.
Next one.
Sorry, 7972. 7972.
Okay, let's
7972.
Okay, 7972. 7972. Then 7118 is it correct?
It's correct, yeah.
The next one.
06355.
Okay. So I'm going to say present value of cost, present value. PV of cost equals to that times that. So we are going to say lease PV is equals to sum. How is it looking? 448. Is it looking like it's correct?
That's exactly what we got.
Oh, 440. Oh, that's okay. How is it looking? People have already had answers and I'm still asking. Any questions, ladies and gentlemen? Okay. We go forward. So since we are going forward, the company can buy the machine outright for 2,200. 2.2 million, sorry. 0, 1, 2, 3. I'm putting my ears here. Ladies and gentlemen, now you are as good as me because because now you know what's happening here. Initially, okay, buy. Let's just use the term 2.2 million. 2.2, 1, 2, 1, 2, 3, 2.2 million. And you know what? It would help everyone in the world is if we put that comma. Okay. So let's see. Then depreciation. No. We're not going to do that. Let's do the costs first. The costs. What's the story with my costs here? Let's put this thing here. It's confusing us. Maintenance cost 20 and insurance is 30. So we are going to say our costs here are 50. 20 plus 30. Okay, I want to do 2 lines for that. I'm dealing with clever people here. I won't do 2 lines for that. Costs are 30. What else? What else do we need? So that's the costs. Those are the costs. Then we are going to say after tax costs, ATC, is equals to that times the same story, 1 minus T. What is our T? I think it's 30%. I'm just guessing now. If I'm wrong, so be it. Yeah, it's 30%. My tax is 30%, okay? So 1 minus T, there we are. So we are going to say present value of costs, ladies and gentlemen, present value of costs is equals to, we remember, okay, in case you find one, okay, let me do the long way. The present value factors are here. So I'm going to copy them and put them here so that if you are following, you can see what I'm doing. Present value of cost equals to this 35,000 times that. Okay, present value of cost. Then we are going to say tax shield. Tax shield, we are going to say what is our depreciation. Depreciation. The depreciation. Okay, let's say, you know what, in this line, let's say, when we say tax shield, let's say our depreciation per year is how much? The R 2.2 up to year 0 depreciate, so 2.2 million divided by 3 equals to 22,123 divided by 3. I think I made a mistake. Okay, should be fine. So we know that depreciation is that. But what is our tax shield? So the shield is equals to that times our 30%, which is the tax, 220. Then we're going to spread it over the 3-year period. I'm going to be lazy and copy this over the 3-year period because I don't want to go and fiddle with it. Okay. Now we're going to say, what is the PV? Okay. Am I forgetting anything? I don't think so. Okay. We are going to take the factors. I'm doing it the long way. A PV of shield. Yes, Anati. What do you want to say? You don't want to say anything? You are just letting me make a mistake while you're looking. I don't mind making a mistake. So our present value of cost is equals to sum of that. And our present value of shield is equals to sum of that. If everyone is quiet, I'm going to do my own thing. Huh? It looks like it's too much. But we are not going to argue with it. It might be correct. Okay, 4 decimal places. Okay, now we are going to say what is the net present value of cost, NPC, is equals to this advantage. Okay, okay, net present cost equals to this advantage minus the actual cost, present value of cost, which gives us that. So the net cost of machine is equals to in other words. Okay. Okay, well, let's do yours. Any questions before you start doing yours? I'm happy with my answer. I'm not going to be the first one to condemn my answer.
I'm not condemning any answer, but I'm not sure if I followed. Please, just for the last time, please just take step by step and then, yeah.
Yes, can you please repeat because
Yeah.
I'm
Well, you are not
thinking
going,
out
okay,
loud
but you are
in
happy with the
my
answer.
mind.
Saying we are happy with the answer.
Well, I'm not in a position to be happy
To be
on.
happy or not. Because if you are unhappy with the answer, then we are so sorry. Okay, so this number, you understand where it came from? Who is going to be
Yes.
talking to me, Mandy or Nelly? One of you should be talking to me. Are you happy with this number?
Yes, we are.
Okay.
Yes.
Then the years obviously are happy with that. Are you happy with this cost, the 50,000? Because remember, the cost came from, okay, now this one is blocking. The cost came from where?
It's the 30 plus 20.
Yeah, from line 5, 30 plus
Maintenance
20.
cost.
Okay, so that's the cost. After tax cost, you are happy with that because we are reducing the cost by tax.
Okay.
Are you happy with that?
Yes.
Okay. Mandy is the one who said I should repeat, but now she's quiet.
Yes,
Okay.
I am following now, Doc. Sorry.
Okay, the PV factors, you are happy with them because of course we know where they came from.
Yes, I am.
Okay, now what about this number? You're happy with this one?
So you
35 times that
the PV. Okay, that's
to
fine.
find the present value of costs per year.
Okay, I'm fine.
So then I added everything to come up with that 79.
Okay.
Okay. Then we went to the other side. We calculated the depreciation per year, which is the 2.2 million divided by 3.
Divided by the years.
Okay. Then we say, what's the tax shield? The tax shield, remember, is the tax times the depreciation, which is this one. 30% of that is 220, according to Excel. 220, 220.
Okay.
Then we went here and found the present value of the 220. So we borrowed these factors and we put them here. And then we're going to say 220 times that to find these present values.
Okay, and then there's the total there.
The total there.
Okay.
So we know that this is our advantage. This is what the government is giving us back. So we say, from what the government is giving us back, we take away the cost, the 79. Now we are left with this. It looks like the Excel only has one color, green. Okay, so we are left with this. So that's the advantage, net present value of the advantage. So we are saying, okay, the cost of the machine plus, or the net present value, okay, whatever, but we are reducing the cost by that, which gives us 1,777.
Okay. I'll
So-
raise my hand if I don't understand, but I got
So we are all happy with the answer. I'm happy and everyone is happy. The world is good.
Doc, I just wanted to ask, I noticed on the assessment, the sign in front of the final answer really matters. So what's the concept? The actual amount has a negative and then we say that plus whatever answer we get in yellow, or is it that minus? I just want to understand how we get to use the signs correctly.
Let me tell you about the signs. And sometimes the signs are messed up, like what I'm doing here. It's a little bit messed up. The sign is to say if you are paying out, the sign is a minus to show a cash outflow. If you are receiving the money, the sign should be a plus. So here I wasn't fiddling with the pluses and minuses because otherwise it creates more confusion than clarity.
But Doc, that means then the cost should be minuses as well.
Yes.
Hmm.
So it was supposed to be here, all these minuses, but if you started putting minuses there, then it was going to be a little bit an unhappy process. Okay, ladies and gentlemen, you have the spreadsheet. Reshma, you didn't say anything so far. Are you so far so good?
I'm good, thanks.
Okay.
But I do want to ask you, if they add salvage costs to here, how do we incorporate it into the question?
Don't worry, we are going to see
You're
salvage
going to
cost
cover
here.
that. Okay. Okay.
We have
Thank
at
you.
least the past exam question will have a salvage cost.
Okay. Thank you.
Okay, ladies and gents, let's do this thing together. I'm looking at the time because there's something else which we need to go. So we need to do this thing and then we can do something else. Because I'm sure this concept is you are getting the hang of it. Okay, buy. So buy, the buy option. We are going to say buy. Then we are going to say we are going to put our years. We have 4 years here. We are going to take our years, copy. We are going to put our years here, and we are going to put our years 0 here. So we are going to say okay, buy was supposed to come down here. Company can buy the truck outright for 500. Okay, let's try it. Now we are trying to do, let me show my face. Maybe it might help. It might help. It might help. Who knows? Now let's try to do with the signs. Somebody was saying the signs are important. Okay, now we are doing the signs, ladies and gentlemen. So we are going to say costs. Let's look. What are the costs? Annual maintenance costs, 30,000. Annual insurance cost, 25,000, which gives us 55 minus 1, 2, 3. Okay. Let's see, is there anything else we are includes annual maintenance, the company is only for its, okay, that was the lease. Anything else we are missing here? Nothing. Okay, so these are the only costs for the 4 years. So we are going to do after tax costs. Remember our after tax cost, that times open brackets 1 minus tax. Our tax, I think, is 28% for this one. 28%. Someone has to be ready with the present value tables. And that's going to be, who is going to be ready with the present value tables?
No, I can give it to you.
Okay.
8929.
8929. Next year.
7972.
7972. Next year.
7118.
7118. Next year.
6355.
6355. Okay. So the present value of costs equals to that times that. We copy that. So total present value of cost, we are going to put it in year 0. We are going to say equals to sum. We are doing that. Okay. Now let's go to the tax shield. Tax shield. But before we do the tax shield, let's look at the depreciation. Let's move this. And let's save our depreciation nicely there. Depreciation 300,000, 500,000 over 4 years, salvage 0. So equals to 500,000 over 4 years, yeah? Okay, 500,000, 500, 1, 2, 3 over 4 years, which means 125 depreciation per year. And if we do that, the tax shield is equals to that times 28%. Ladies and gentlemen, this is getting easy. Why don't they ask more difficult things? I think that's what everyone is thinking. Why, please, when did you get them to ask more difficult things?
Sorry, Doc, I think the tax is 28% if you go to the top.
Yeah, that's what I put. 28% there.
Okay, sorry.
Present value. Why don't they ask him harder things? That's what people are saying. I say, okay, I'll tell them. Present value of shield is equals to that times that. Copy. So present value of shield is equals to sum. We are going to sum everything. So the cost, net present cost of machine, if we are brave, we are going to just say sum. Guys, we are going to be so brave. We are going to be so brave. And Tony is the happiest man in Africa. Okay, ladies and gentlemen, any questions?
Doc?
Yes.
I think I might be confused as to when we use the 28% versus the 72.
Yes.
The one minus 28
Yes.
versus the actual.
So okay, that's an important thing because when I started looking at it, also it was confusing. We use the 28% to calculate the shield, to just say number times that's the shield. To calculate the actual cost, we are just reducing the cost by the tax. So we are going to say the cost times 72%. Any other question, ladies and gentlemen? I'm confident with my answer. Tony is confident with that answer. But it doesn't mean it's correct. We are just confident. Mandy?
Yes, Doc. I'm okay.
Yeah, you're also confident with the answer.
I think so. I just need to go back to it again, but yeah.
Ladies and gentlemen, okay, let's just look at the past question, and then let's look at the past question together, and then we do something else. Otherwise, we'll run out of time. Okay. So this is the past. Let's do which one? This one or that one? The United one or the area one? Which one do you want? Anyone?
Let's do the Harry one. Fine.
Let's do the area one. Okay. So I'm going to hide the United one because I think the United we saw it before. Let's do the area one. Remember the steps are okay. Since we now have space, we can do something here. Let's also zoom because now we have space. Area limited. Let's reduce there so that we create space for ourselves. Area limited is determined that a new specialized track needs to be purchased. The company has an option to either lease the asset or purchase the asset. Of course, lease is simple. Lease got a quote for the manufacturing for leasing the track. The lease agreement requires 5 annual payments of 750. Full stop. Let's look here. In case there's something. Assume the current corporate tax rate is 28%. You are required to determine the after cash flow of all the two alternatives. So there's no additional. Let's hear purchase of that. Okay. The question is clean. But the lease part is clean. Okay, so we're going to say lease payments. I didn't do it. That's how confident I am with this thing. Confidence is not a measure of accuracy. So lease amount is 750,000. Agreed. Okay, we are going to put our for how many years? Lease for
5.
5, yeah. So we are going to say 1 up to 5. We are going to hold that thing. Oh, we are in luck. Ladies and gentlemen, don't let me run away. I might be doing my thing here because I'm assuming everyone is following. Meanwhile, and I'm confusing everyone. So then the first thing we do is to remember the tax. I'm reminding myself, I'm not reminding anyone. Okay, after tax lease cost is equals to, we are just removing the same story, times 1 minus tax. 1 minus, what's the tax? Tax we are given is 28% minus 28%. So that's that. Then we are going to find the NPV factor for using what? 14%. Who is going to be kind enough so that I don't confuse anyone by creating my own? Okay.
It's 08772.
08772. Next.
07695.
Next.
06750.
6750. Next.
05921.
5921. Next.
0.5194.
5194. Okay, thank you. Let's be kind. Thank you very much. Let's be 4 decimal places. So I want to say present value of lease equals to that times the present value factor. The same story, ladies and gentlemen. We are going to do that throughout. So we're going to say lease cost. These marks should be easy to get. Lease cost. There we go, 1.8. Okay. Now we are doing the unhappy part. Okay, maybe it's going to be unhappy this time. So we're going to say depreciation. Let's first calculate depreciation here. This side. Purchase alternative. It's such a question. It's fitting on one screen. That's good. Harry Limited can purchase a truck from the same supplier for 3.25 million. Harry would have to incur additional amount of 10,000 per month service charge. Okay, that's fine. The business where we are worried about this, I'm looking for depreciation. Mr. Kane could utilize his businesses to finance the okay, that's fine. The truck is depreciated on a straight line over the 4 years with a zero market value. Okay, there was a question. Was it Reshma was asking the question about salvage?
Yes, I did, yes.
Okay. If there's salvage, then we are going to say 3250 minus salvage divided by the period. I thought we would find salvage here, but no. So there's no salvage. So if there was salvage, we would say 3250, 123 minus, but our salvage is 0 there. Divided by the number of years is 4. So our depreciation is that. Okay. Now let's go to annual tax, annual costs. If you want to be kind to yourself, you go, but there is only one cost. Looks like there's only one cost. He is to incur an additional amount of 10,000 service charges. But the trick here, ladies and gentlemen, the service charges is per month. So we are going to say 10,000 times 12. Then you spread it over the 5. I don't know why 4 years. Okay, that's the other thing we I was unhappy with this question because it is two different time period which creates confusion. Are we trying to do it over 5 years or 4? But this was the actual question, so I didn't improve it. You see, the first one, the lease was for 5 years. This one is for 4 years, okay? We are going to assume it's 5 years. We pray that way when we get our question in the exam, it won't have this funny thing. Pay service charges.
Doc,
the business,
sorry.
yes.
If it does, then what must happen? if we do get the exam, because I mean, yeah. Because if we calculate over 4 versus over 5, it'll give you a completely different answer. So what? And there's no one, you can't raise your hand from your laptop screen. So you
can try.
How do we?
We pray that now there's better quality management going forward so that these things don't happen. Nelly.
Okay, I have a question there. You know, where it's saying phase payment due to delivery of the truck, isn't that year 0 for the lease? Then meaning we're starting from year 0 to year 4.
What did he say? Here to quote, leasing, the lease agreement requires five payments of the with the first payment. Oh, good point.
Meaning from year 0 to year 4.
Good point.
Then it's going to be the same for the purchase.
Yes. Oh, that's a good
1
point.
to 4.
Oh, that's a. You had your coffee. That's good. That's a good sign. So what do we do? We are going to. I know. Okay, what do you think we should do? Because now we are almost on the same level. We understand what's happening. What do we do? What should we do here? We are going to remove that, and we are going to move this by 1 year.
Yes.
And we are going to put a 0 here. And we are going to move this by 1 up.
Yebo.
And we are going to put a 1 year.
Yes.
Then if once we do that, let's see if it's still multiplying the same V. same V, but this one is unhappy with us.
Don't remove those.
The what?
Then you delete the first one.
Oh,
Yes, 0.
there's a one issue you're supposed to do. What happened here?
Yeah, we moved everything, Doc. We did not move the one on year 0.
This one?
The one above it, yeah. No. The 473.
This one? Oh, yeah. Now it's doing whatever it's doing, some crazy stuff. That times that. We are in U. Okay, so let's copy again because now it's doing some crazy stuff there. Now we can sum it. Okay. So we are going to say service charges. Now it will be good if it's service charges. Now it looks good. So we only have service charge for the 4 years. Any other cost? Nothing. So we are going to say after tax cost is equals to that times, is it 28%? 28%. Okay, we always say 1 minus 28%, and not try to shortcut when we can always use Excel to do the calculation for us. That, so, remember somebody who helped us before said we should put a minus because minuses are important so we can't perpetuate bad behavior. Then we are going to say after tax, then we are going to say PV factors. We are going to go and borrow that and come and drop them here. And we are going to say PV of costs, we're going to say equals to that times that. Then we are going to, why is it a plus? Why do we have a positive now? What did I do? Oh, I said minus times that. Okay, copy. So we are going to be here, we are going to sum everything. Now let's do the tax shield. I'm sure now you know what we are doing there. So we know depreciation is 81, this one. 81 to 500. We already calculated the depreciation before. So our tax shield, so we are going to label it nicely for the examiner to give you marks if they want. We are going to say so the shield is equals to that times 28%. Then we are going to copy that. Then we are going to do that. Then we are going to borrow that present value factors. Ladies and gentlemen, we are doing it so fast, we are going to make a mistake and we are going to be proud of our mistake. Present value of shield, we're going to say equals to that times that. Then we are going to say copy that. We are going to then say total present value here. Ladies and gentlemen, we are going to be so proud of our mistake. We are going to sum everything. And we come here, we are going to say, so costs, total cost. Since our signs are all good, we can actually be brave and just sum everything. Where is the cost? Where is the purchase cost? It's going to be here. How much was this thing? 3.2 million. We are going to put it here. Minus 3,250,123. So what can we say? So leasing. Okay, now the decision is to say, what should the company do? The purchase is that or leasing cost is that. Therefore, the company should lease because it's cheaper. Any questions, ladies and gentlemen? Everyone is quiet.
It's happy, similar to the previous thing. The only thing
It's
is well done
similar.
on picking up
Smart.
that year zero thing. Yeah.
The only thing which we had missed, that's not the year zero thing. It's a good thing when we are doing it as a group, we can see all these things. Okay, ladies and gentlemen, we are going to run over a little bit because I want to, but we did this before. Okay, let's go. When we see 12 o'clock, and if you need to go somewhere, ladies and gentlemen, you should go. This one. I want to teach net present value a little bit because it's an important concept, especially in international budgeting. And then we'll do one of the questions, the past questions together, and then we call it a day. Should you start a 300,000 Uber business, which promises to get a profit of 20,000 annually for the next 5 years, if your required return is 12%, if you are allowed to depreciate 300,000 cost vehicles straight line over the 5 years?
Doc, do you want to go back to the previous slide for 2 seconds? There's something that I just missed just for 2 seconds.
This one?
No, the previous one, the previous question that we were doing.
The spreadsheets.
Yes.
This one.
Yes, thank you. Thank you.
Okay. Okay, let's go here. So that's the business. So we're saying depreciation, because it's straight line over 5 years, 300,000 divided by, okay, that we already know. Cash flow in this case. Remember, if you are investing in NPV, cash flow. So in this case, we're told that should we start a Uber business which promises to get a net profit of only 20,000 annually, but the cash flow per year is actually 20,000 plus this depreciation of 60, which gives us 80,000. This is what it looks like. So we're saying, should we invest 300,000 if our cash flows are this? This is what's going to happen. So we can, remember, we're doing year by year present value factors at that point using table 1. You can actually use table 2 to find the present value of all these, because remember, these are equal amounts over the period, 80, 80, 80, 80. So instead of saying 80 times the present value factor for year 1, 80 times the present value for 2, what we're doing, you can use this factor because it's an annuity to find the present value, which will give you that. And in terms of NPV, we say if the business was, if you were supposed to pay 300,000 and your present value is 288, your NPV will be negative. Therefore, don't invest. That's one of the big concepts in finance. But what I wanted you to just see is this whole factor story before we go to a spreadsheet. Now we can go to a spreadsheet. My conscience will be so clean that I have given them a background. So when I'm sleeping tonight, I'll say, oh, today I worked very hard. I showed them a background. Okay. So now let's zoom it a little bit. Let's reduce the noise. Okay, I don't think you'll be able to do. I don't know. Okay. Okay, let's hide it first. Then we can talk about what to do next. Hide that. Huh. If somebody showed me hide it, I would really be happy. Okay, that one. Okay, so we are told Pulse is South African based. Remember, in this international budgeting, where the company is very important because it shows us the direction where it should go. Pulse is a South African based manufacturer of generators, an award-winning generator. The company is currently investigating 2 options. Project Malls involves extending the company's production facility in Cape Town. The plant will cost 122 million. From our experience, let's give ourselves space here. We know that once we invest, so we already know that the initial investment is going to be 122 million. 1, 2, 3. Okay, we're already taking care of that. to create an additional annual profit of 35 million, 35.2 million. So we say, let's skip a line, profit of 35, 2, 1, 2, 1, 2, 3. Okay? Over what period? 6 years. The following expenses were included in the, okay, let's list the expenses, then we can make a decision. Depreciation was calculated on a straight line over the life of the project. So we are going to say depreciation here, depreciation, we are never going to have enough of depreciation, equals to over the life of the period divided by 6. That's the depreciation. Then what else? Share of existing overhead expenses amounting to 400,000. Existing 400,000. 1, 2, 3.
Sorry, what's that depreciation? Is that depreciation correct?
35 million. If this one is correct, should be 35,200 divided by 6.
But that's on the 122, not on the 35.
Yeah, I think it's 20 million, 333.
It's on the investment of 122 million, not on the profit.
Yes. You are right. Not on the profit. Existing. So then the additional fixed costs is equals to 325, 1, 2, 3. Okay. And now we have to make a decision of what to include and what to exclude. What to do with whatever. Okay. So we know profiting, okay, fine. Depreciation. Let's multiply by -1 so that we have a positive number there. Depreciation, we are going to add because we are told that it's included here. But we know that it's not a cash flow item. So we are going to add back to the profit. Existing overheads from head office, they were included in the profit. So we are supposed to, what are we supposed to do then? Mandy. Bobo, what are we supposed to do with this?
Since they're existing, don't we ignore?
No, but we are told, share of existing borne by the head office. I think they were included. Because it's part of this. It's under this. They were included in the annual profit. So we add back because the profit was reduced by these expenses which were not supposed to be there. So we add back. Additional fixed costs. I'm going to say ignore because these costs were additional. We're assuming they are related to this project and they are already taken into account in the profit. Therefore, we are going to say, so the annual cash flow is equals to the profit plus that, and then we ignore that. So what we are going to do is to go present value factor of 6 years and 12%. Cost of capital is 12%. What is that one? 12% and 6 years. I actually have a table. Can you imagine? Of all the people, all of a sudden I have that table. 12%, 6 years. 4,114. 4,114. So present value of this project is equals to that times that, which gives us 229. Okay. That's our present value. But remember, we are trying, then minus initial investment. So NPV is equals to that plus that. So that's the local projects. Any questions about the local projects? Any questions about the local project, ladies and gentlemen?
So, Doc, there's no tax shield that should be calculated for depreciation.
It's not given.
It's not given. Okay, thank you.
Not given.
Doc, in terms of what you need to consider when you add or you ignore, what's the rule there?
The general rule, which should be top of mind, we will disagree about whether it's in or out. The general rule is to say you only take into account costs relating to the projects. So if there are extraneous, cash flow items relating to the project, if there are extraneous items, consulting fees, head office expenses which were not related to the project, you remove them. But this question is such an English question. Such an English question that you have to read it very carefully. Okay? Let's go to this part. So we've done the first part. The second part, which is this one, involves setting up an independent manufacturing facility in Taiwan. The cost of the facility initial outlay is 99 million. So we already know initial investment equals to 99,712,123 Taiwanese dollars. These are Taiwanese dollars. This will result in an annual profit of, I'm going to repeat, Tony, I'm going to repeat that mistake. If there's depreciation, I'm going to do it the wrong way again. Just so that I don't learn these things. And it's also what? 6 years. Just profit 6 years. The annual fixed costs and variable costs are 6. These costs, okay, let's first have them. Let's say fixed costs were 6 million. We will decide whether to include or not to include once we have them. Otherwise, we get confused. We, as a royal, just me. Okay. In the consulting fees, let's put all the cost, and then we'll talk about what to include and what to exclude. 720, 1, 2, 3. Okay. Consulting fees, 720. Now let's talk about what's the story here. Fixed costs. The annual fixed costs and variable costs of that and that. These costs were not included. So we need to subtract them, because we are saying of these 45 million, we did not include these costs in the profit. So we are going to say our profit is overstated. So we are going to minus. It would help if we had the correct spellings. Minus. Okay. Consulting fees, remember, it's we call it a sunk cost. Ignore. Anything else, ladies and gentlemen? Anything else I missed? Because this is really an English question.
Sorry, Doc, what are other sunk costs that we need to consider besides consulting? What else would be a sunk cost?
Sunk cost, if they tell you there was 30,000 fixed cost for head office, it's called a sunk cost because it's a cost which has already been incurred.
So any head office cost will be ignored?
Any head office cost which don't relate to this project, it's a sunk cost, to ignore it. But their favorite sunk cost is this consulting fees. Okay. So if anything else about what I'm doing there, ladies and gentlemen?
So Doc, in the previous question, it had fixed cost from head office. What happens there? Because I don't think they are related to the project. But then
yes, that's why we added them back here.
Oh, okay. All right.
Existing existing head office, we added them back because the way they had reduced and Julie had reduced our profit. So
okay. Understand.
Equals to that our profit. If you do this, you are going to make your life easy. Minus, you can see now we don't have to be too clever. We already know what we are going to do. There, So we are going to go and find a factor. Okay. But ladies and gentlemen, here, that's why I wanted to do this with you. We are also told in line number 31, the Taiwanese inflation is expected to exceed the South African inflation by 4%. So our discount factor is no longer 12 over 6 years. It's 12 plus 4 over 6 years. 12 plus 4 is 16. So we are going to say 16 and 6 years. I don't know whether I'm making sense. Okay, let me first to make myself happy. Yeah, but not to make anyone happy, myself. So we're going to say normal discount, the normal cost of capital, so that when I send you this, it will make sense. 12%. So inflation 4%. So total equals to, this is the wrong way of doing it, but that's what's expected of this module. To just say that plus that. So it's 16 on 6 years. We go to the table. And you should show it in your answer, you should show it. 16 and 6 years. 36847. 36847. 3.6847. To make myself happy. So we are going to say the PV is equals to that times that gives us that. Okay, now we are here. But remember, these are TWDs, not South African rands. Okay, so we are going to say, what is the NPV? NPV is equals to our initial investment plus that, which is a positive 32 million TWDs. Okay, now let's go back to the question. The current spot rate, exchange rate, is 4.2 TWDs to the rand, which means for every rand, you are going to get 4.2 Taiwanese dollars. So to convert to rands, so we will say here exchange rate, because we want to get marks for all these things, 4.2. So you are going to say 4.2 TWDs. We are waiting for marks, ladies and gentlemen. Don't just I imagine the examiner is drawing or unhappy when they are marking. So it has to be clear so that they can give you a rand equivalent. It has to be clear so that they give you the marks. Because usually marking is not one of the funny jobs. Marking is one of those there. So now we have our Taiwanese project is giving this is $1 billion. Yeah.
4.2, Doc. You didn't put the point between the 4 and
I
the
was
2.
wondering, how did you end up with billions? 135 million. Complete the necessary and advise which is worth investing. So we are now comparing that and that. So these are our old NPV. They are our local NPV versus. So in this case, we are going to Taiwan. Any questions, ladies and gentlemen? In this case, we are going to Taiwan. If you do this, if you don't make any mistakes, if you are perfect, like a perfect person, then you get your 25 marks. Then you are on your way to a distinction. Reshma?
Yes.
Anything? Any question?
No, I'm cool. Thank you.
So,
I just need to practice.
Okay.
Yes.
Maybe just on the Taiwan thing. So the figures we have now, that 99.7 million, that is Taiwan TWD.
Yeah, this one is
okay?
Taiwan dollars.
So the equivalent rand of that would be divided by 4.2. Am I right?
No, times 4.2.
Is so for every $1 Taiwanese, you get 4.2 rand.
You're right.
Because yeah,
This one is what Taiwanese. What happened here?
it's the other way around.
It's the other way around, yes. So this is the Taiwanese dollars. So for every rand we are supposed to divide. Yeah. Oh, so it's a small amount. So we're not going to Taiwan. So you're not there with what I had there, no full marks, no 25 marks, maybe 20. Because your recommendation will also be wrong. Any questions, ladies and gentlemen? I will stop the recording so that any questions, I will stop there.
No, happy with that. I think I was 1 or 2 marks deducted because of that, like stating Taiwan dollars versus exchange rate and adding those comments in there.
Oh,
So,
that's
yeah.
why you were late to it.
Yeah.
Some of us, our mistakes have no consequence. Oh, ladies and gentlemen, this is our last revision class. Thank you very much for your support. Thank you very much for the time we spent. You forced me to create more resources so that next time if I have another class, I will have even more resources to share.
Thank you very much, Doc. It was really appreciated.
Yes, we're very grateful, Doc.
And I'm hoping you are going to practice a lot more.
Definitely.
Yes.
Because the exam is what? 21 next that other Friday.
Mm,
Yeah, so we still have time.
yes.
We still have time. We still have time to really perfect this thing. Okay. Otherwise, goodbye.
Thank you, Doc.
Thanks.
Thanks,
Have a nice day.
Doc,
Thanks,
please
guys.
don't forget to send the spreadsheet again. Ne?
I never forget.
Hey.
Thank you.
Doc,
guys.
thank you very much. Thank you very much for your time and your commitment. Really, it has been appreciated.
Okay. Okay, bye.
Thanks,
Cheers,
everyone.
cheers.
Bye.
Bye. Bye, everyone. Well done, Tony.